Good. January 11th, 2025, first video of the year. I've been gone for a while, hadn't really 2025 the year. So getting right into it, we as far as equities are concerned in the macro environment, we at the back half of 2024, NASDAQ, S&P 500, Dow Jones making all-time highs, right? Since FOMC, the last federal rate cut decision, we've sold off a bit. We've had I think that day we pulled back on NQ futures 1,000 points in less than an hour and a half, going into the close. So volatility is up. After that we had the holiday period where trading has just been more tranquil, not too much going on. But here we are, second week in January is over, first week of full week of live trading being last week, and we had some decent news. So hopping right into it, Monday not so much. Jolt's report was the biggest event on Tuesday. We had we got the minutes from that meeting. I didn't hear them. I just looked for a reaction. I don't know what the meetings were, but I imagine it had something to do with looking at jobs and still trying to keep the what did they say, the easy landing, the soft bottom, the soft landing for rates in the market. So more jawboning to that effect. And then Thursday we didn't have anything. I think Jimmy Carter, RIP Jimmy Carter, markets were closed, U.S. markets were closed on Thursday. And then Friday we got the NFP report, which it provided a nice catalyst for a move. The move that happened, I was expecting. I think I traded well and gave back a lot of profits on Friday, but we'll get into trading later. Let's look and see what we have coming up next week. Monday is a non-event as far as news, no red folder events. Coming into Tuesday, we kick off the news cycle pretty strong with PPI and then CPI. Usually PPI comes first, I think. I don't know why PPI back half of this month. So we got the jobs data yesterday on Friday, the 10th, January 10th. And then we start the middle of next week looking, with forward-looking guidance as far as PPI and CPI. Following that, we get retail sales, and we wrap up the week, with another unemployment news. So this is the week that we're going into. Tuesday and Wednesday will be, I expect, some decent volatility and range on those days. Getting right into the charts. The title of this video, as far as why I'm bearish now on equities, mainly the NASDAQ futures, and why if I'm looking to take loans, I'm thinking gold can approach, if not surpass, all-time highs. So right now I have a chart of the dollar. I see a gap right here that I should probably mark. I really don't trade gaps, but being that we're this high up, we haven't been up here in a while, it's fairly significant structure. So I don't know, I'll just call it an area of interest. Well, I usually don't have black charts, so I'll call it something else. 4-hour candle maybe. Yeah, that's good for this color scheme. Yeah, if you look to the left of what happened here, it was support and resistance, this same gap that we're in now. So in the next few days, as far as price action on the Dixie, I'll be watching this level. I am pretty bullish on the Dixie. You can see, this gap that I just drew, we've already come and tested the bottom, and it looks like if I on the weekly chart, we've closed above it. So I'll be looking to, for this structure to remain supportive of price action on the daily, on the weekly, and intraday, on intraday candles. If we take a look at the 15-minute, if we find ourselves journeying inside this gap, I could see it being supportive around the 50%. if not the low end, the bottom. I don't think we'll get there. I'll be looking for us to hold the top of it. If I put on, so if I get rid of the drawings and just look at momentum and see what we're looking at. This is my first time, so you're getting a live reaction. I'm just now seeing this as well. So the weekly is in a breakout. So, you know, we have struck a structural breakout and we have a momentum breakout in the Dixie. And I'll go into the implications of what that entails for the markets, for gold, for trading, for the, you know, market conditions going forward. But it is notable. I think that's what's important. It is notable on multiple time frames. I'm seeing momentum breakout to the upside on the Dixie. So that's kind of lending to a higher rate environment. As far as, you know, interest rates and bond yields are concerned, like I could, and that alone, just a strong dollar, higher rates, that's enough for equities to decline. So let's first start with the bad news, like why I'm bullish on NASDAQ. For the longest, since September, I've been bullish on the momentum of the NASDAQ, and it's paid out pretty nicely. I think I trade NQ futures, and that's why I was on NASDAQ, just so I wouldn't have to have this messy chart. But just looking at NQ futures, because most people who will follow, or, you know, what I'm interested in is the futures price of NASDAQ. So, you know, we've tested multiple and significant moving averages for support, and basically, according to my strategy on the weekly time frame going into the back half of last year, we've been bullish. But lately, we've negated some of that bullish activity, and when you get down to like the daily time frame, you can see that momentum is waning, right? So we do have support coming up. I'll be looking for support around the 20,727 level. Should that break, you know, that's when we get into bearish territory as far as looking for levels as low as the 19Ks, you know. Transitioning from 20K to 19K should be a pretty swift move if we start breaking that 700 level. So, you know, that's what I'm looking for on NQ. I'll probably go back to because again, my chart is really full of drawings that are already there, and so I won't have to delete them, but I could still look at price action. I'll probably come here, and I will say price action a while. I just really want to make this a short video. I think at a later time, as I continue to produce videos, I'll get into more technical analysis, but I really just want to get this first video of the year out, give my thesis as far as what I'm thinking going into the beginning of the year, and just see how, you know, over the first quarter, Q1, Q2, Q3, Q4, how that thesis is playing out. And I'll update it as I go further. But I'm bearish equities below, on NQ, below 2727, and, you know, with targets as low as 19K. And gold, I'm pretty bullish on gold. The gold chart, this may be it's an asset that I don't normally trade. You know, I've taken a few trades in gold, but there's this support we had. It was just a level at first, but it was later determined to be a channel. That was support if we broke inside, and since November of 23, we've been trading around the midpoint of this channel. And I had a decision area right here on whether I was going to be bullish or bearish on gold. I think that level is 2647. It was my expectations that we would lose this level and find support down here and building structure before breaking out again. As of the last 2 days of this current week, or the week that we just left, we have broken above that level. Excuse me, I apologize for moving the charts around so much, but I'm trying to. So we broke back above it, used it as support, and we're back firmly inside the channel. And we got back inside the channel with a nice 4-hour candle. I think that's the most notable recent candle on gold, is this 4-hour candle from the non-farm payrolls, right? It's a pretty decisive candle. I think it's a good area to limit your risk. You could probably frame out that candle and just watch it. Me, myself, I'm looking to find a trade off of this candle, like either on a breakout or a retest of the wick. And I'll give you those levels in a minute. I really need to change my background on a new video. I think it may be a little too dark. We'll get better. We're always striving to get better. Maybe I could call it fair value gap. Yeah. All right. So if we look intra candle of this 4-hour, like say on a 15-minute chart, I'm looking to position myself around the 50% of it or the low of it, looking for longs. I will take the breakout long, that level of the breakout of that 4-hour being 2735.5. The other significant level I'll be looking at is the midpoint of that 4-hour candle being 2711. And last, the low of it being 2687. So as far as how I'll trade this, let's get some momentum on the screen so that we could see what levels around there are important. So just on the last two dailies, what is this, Thursday we broke outside. So let's rewind a little bit further. I explained how I was bearish, looking for us to come down here so I could get long, hence the get fucking long. However, we never stayed below 2647. Not only did we not stay below it, we came up and, there was many short opportunities up here, or, so I would have thought, so that we could get that sell-off to buy back. But what we've done is we've negated the bearish momentum. And so now gold has already, in my opinion, broken out, right? And it formed that 4-hour candle, which that 4-hour candle set the whole range of the whole day on Friday. Also pretty bullish. So again, if we break down below this level, I wouldn't be bearish. However, I could entertain, at least getting back down to the 2647. If I could find a long somewhere below the midpoint of this candle, in discount, whether it's 75% from the top of the candle, 25 from the low, anywhere in that level, below that level I was saying earlier, the 2711, I'd be looking for longs. Maybe it happens in the overnight before, in Asia kill zone, London kill zone. But at some point, if we could go on an intraday candle, find a pullback in gold, like say, it's just bullish, but it's up here, but these moving averages will consolidate, and sniping along anywhere in this area, for risking as close as you could get to the bottom of this 4-hour candle, this gap it's not a gap, but that's what I'm calling it. If you could get an entry as close as you can to the bottom, putting your stop on the other side, targeting a breakout of the high of this candle, I think that's a pretty decent risk reward. You may not get, maybe settlement, maybe it'll come on a settlement retest, settlement being 26,991. So a long anywhere close to 2691, risking a breakdown below say 26. My eyes are bad. I really need my glasses, and here they are. So let's go over that again. So as 2685, now I can see great. So yeah, having a stop at or below 2685, having a long entry somewhere around 2691, 92, the 2690s. If we could snag that long, anywhere below the 50%, anywhere in discount of this 4-hour candle, I think we have a decent, even if it doesn't happen that day, this may be a trade where it ranges and gives that opportunity plenty days until this candle is chewed through, enough volume has been displaced inside, and it's time to break out or down. I do feel like this range will be significant in the coming days, and that'll be the trades I'm looking to take. So I think we've covered everything. I think I've covered the NASDAQ and why I think it goes down. I've covered gold and the overall macro thesis base. It's not only based on the dollar, but for the sake of short form content and keeping this video short, we're just gonna stick with the bullishness of the dollar as the main thesis, higher rates, and us already coming off of all-time highs being the motivation behind a possible, we're not going to zero, no. However, my long bias I've held since mid 2024. I can't deny the bearishness of this chart, and so going forward I'll be looking to short indices, mainly NASDAQ, long gold, and silver as well. However, your account has to be sizable enough to take that 25, because that's like what, an hour right there. That's a lot of, I mean, yeah. Yesterday's FOMC was giving buying vibes in metals and sell-offs in equities. But yeah, that's all I have today. Hopefully we'll have more content coming going forward, and we can start this year off on a good foot, putting all negativity behind us, and just trying to be great, man. It's a lot of stuff going on in the world. If you got loved ones and family, keep them dear. You never know what could happen. They could be here one day, not the next. So just make sure you're keeping positive. You're looking at your technical analysis, taking your setups, following your rules, and let's do good this year. All right. Donnell Price out. Thanks for tuning in to the first momentum movers trading market recap of the year. I'm sorry for stammering through that. I might cut that. Yeah, Donnell Price out. Thanks for watching the video. Thanks for catching the first momentum movers of the year. Trade well, trade smart, trade on. Donnell Price out.